Good weekend, all. Ira Epstein of Linn Associates with your July 2nd, 2021 market wrap-up, your weekly edition of your metals. Now, I want to wish you all a happy 4th of July, America. Thank you for everything you give us. It's phenomenal. And what a difference this year is from last year. Now, today, of course, the big event was the jobs data number, and it was a sweetheart number. If you take a look at bonds and notes, the market rallied, which means real yields fell. The gold market rallied, the dollar down, but not very much, and yet you were able to get these metal markets going up, and of course the stock market. Now there's been some rotation for earlier in the week out of the NASDAQ and into some of the other value areas, but that's always going on in these markets. There's been nothing going on in OPEC as of my shooting here. The United Arab Emirates is still saying no. They don't want this deal now. We saw when Russia put its foot down against against the Saudis, and they got crushed. But this is about metals, so let's look at the chart. Now, how we work this out is the first chart I'll show you is a monthly chart, and then from there it'll be the weekly chart. I'm going to show on each one the black dashed lines are Bollinger Bands, the 18-week moving average of close. I'll be showing you the 100-week, the slow stochastic study as well. Stochastic's pointing down. The market has a pattern of lower highs. That's why I've got the arrows pointing down. Lower, low, and it closed underneath again the 18-month moving average. Did I say week earlier? It's the 18-month moving average of closes. So trend down, bias down, momentum down. The chart's still very much in a bear pattern. You'd have to get on the current way that I teach charting over 19, 16, 20 to negate that pattern. When I come to the weekly chart, this is called an area chart. And I've been looking at it, and I've been telling viewers during the week, Monday through Friday, I didn't want to see the market close under that low, the 1767.70 level. And as it turns out, it did not. It did a fine job of holding it. Now on this chart, you turn the bias up on any close over 1790.5. You can see how the chart came up, had a very hard break, and when I put on the study that's proprietary to us, the swing lines, you have a pattern of a higher high, and then this low took out the low back here. So that's not a trend. Higher high and lower low is not a sequence of a trend, and the market's underneath the 18-week moving average of closes. Therefore, the bias down, no trend here. The market is fighting a battle. It's what? Maybe get into this area. This is the 200-day average, this right here, Bollinger Band, the 100-day, and battleground has been now for 3 weeks in a row, the 18-week moving average of closes. How could the trend turn up? I'll give you an idea here. If this market were to now take out this high, it still wouldn't do anything. When you broke 1754.60 by getting down this week to 1750.10, you've taken away any chance of it developing a new uptrend or, for that matter, a new downtrend. You're sort of in limbo on the chart here. When I look at slow stochastics, which are a measurement of momentum, they are pointing down. So I have the bias down. Why is bias down? Because the market settled underneath the 18-week average of closes. I have no trend. Remember, in an uptrend, you have higher highs, higher lows, and in a downtrend, lower highs, lower lows. You'll hear that on TV all the time. Well, in this case, you got a lower low and a higher high. It's nothing. And often markets fight. At the red line, on a daily chart, that's the 18-day average. On a weekly, it's the 18-week, and that's what we're doing. The gold-silver ratio has been hugging the 18-week moving average of closes. It got over it, back under it. There's no edge here to the silver or the gold ratio right now. Silver market has a pattern of lower highs, lower lows. It had an outside week up. I put a lot of credence on that. When you get an outside week up, one of the tools I use is if you take out the low of an outside week up within the next 2 weeks, so next week or the week after, if that's taken out, that means that the market is likely, I wish I could use a better word, but very likely to make a run towards the lower Bollinger Band. Assuming it's not taken out, which it wasn't, yet, and it closes over the 18-week average, which it did, gives you a different formation. While the trend is down with lower highs, lower lows, I use a filter on the trend. When the market is over the 18-week average, if it's up, I have an upside bias. If it's under it, then I have the downside bias. It has an upside bias with the market, in a downtrend and momentum pointing down. All the card parts aren't there. The copper market is still very much in a downtrend. Why the difference? Lower highs, lower lows under the 18-week average of closes, momentum pointing down. Now, should this market still get under 408.80, would that mean anything? Not an outside week, so not really. Just be more downside. Is there anything on this chart that can turn it bullish right now? I see nothing. That doesn't mean you can't go higher, but in terms of creating a trend up, no. You'd have to take out to just end the downtrend, 469.70, to break a pattern and then have a pattern of a lower low and a higher high. Can you resume the downtrend? You betcha. If the market today, or this week is the right words, takes out this week's low, which was 420.20, that would give you then another high right here, so you'd have lower highs. You'd have already made a lower low whenever that occurs. I don't care if it takes the high out first. And if that happens, target could be the 385 area. In the platinum market, markets trade within Bollinger Bands 95% of the time, and that's what these black lines are. When a market steps out of it, each consecutive week, day that it's out of it, consecutive, takes away, in my opinion, in the way that I teach in my charting course, 1% of that 5%. In other words, 1/5. Well, it got under it, back over it, and it stayed over it. So we have an oversold market that is hugging the lower Bollinger Band and not trending. You have a higher high and a lower low. Then we get to the dollar index. The dollar index is in an uptrend. While the dollar index today faded a little bit, still remember we had a big jobs number. We're not getting the inflation that you think. The participation rate, and that's where the market was looking, is only 61.1%, pretty much unchanged. And, I don't think you get these massive improvements that people are looking for until you get those 25 states that have elected to stay on the government program off of it, and then people are looking for jobs. Now, they don't have to wait for their last check. They'll be looking ahead of time. So it'll be the service industry, the hospitality industry. You're going to get a lot of jobs there. The higher paying jobs, I doubt it. People aren't on those government payrolls and that relief program for that. Higher lows, higher highs. If you rally, look for resistance, 93.32.5. What would break the uptrend? Getting under 91.50.5 would do that. So I put it all together, looking at what the markets did, an interesting week. And remember, one of the things I do is I help you in the mornings. At 5:40 a.m. Central Time, that's in the morning, folks, on Monday through Friday, I start recording my futures video. In that video, I'm going to cover 40 charts for you, 40 of them. Very specific, buy here, sell there, here's the stop. Why am I doing that? Let's assume that you're looking to put on a trade and you're looking for somebody else's opinion of what the chart looks like. That's where I fit in. And I make this very inexpensive to do it. I start you off on each video with what's going on first in Asia, Europe, back to America, the reports that are coming out today, what the market's looking for in that report. Then I'm going to walk you through the charts the way that I do them. I will cover all of these areas. There'll be over 40 charts. On the ETFs, over 40 of them. And I cover the ETFs. I start that video at 8:40 in the morning recording. Why the difference? Well, the stock market, I want the first 10 minutes to be open. Then I'll start picking up the momentum from that. Inexpensive, your 6 videos a week. 5 on the dailies, 1 on Saturdays typically, all weekly charts. $16.90. So you're getting about, 48 videos, about 20 minutes a piece a week, all analysis. Now, you might say, well, how do I watch all that? Let me tell you what we did. On the bottom, there's a scroll bar on our website. You drag it and pull it, and from there it lights up, oh, I'm in spiders area, I'm in an energy area, or in the futures, oh, I'm at the metals, I'm at the currency area. It tells you right where you're at. You learn to go, because I always do it in the same sequence. Go to our website. A lot of information there about it at www.iraepstein.com under the word research. If you want to take any of the charting courses I have, look at the education there. I'm Ira Epstein. Have a great one. I'll see you Tuesday afternoon.